We spoke a few weeks ago, and when we last spoke, you actually embarked on a few new strategies, and you upped your equity weighting from around 40% to 50%. I know that that's obviously worked in your favor. Take us through some of the strategies that you have embarked on, and then give us a sense from contextualize it for us, given the fact that also we've seen massive developments occurring in Europe.
Thank you, Lenny. Well, largely what we felt was that the equity market in particular had factored in a lot of the bad news, and the valuations, particularly in Europe, were quite sound, and just generally across the equity markets globally. There were some pockets of value. We were looking at shares that were paying dividends, etc. BAT is a great example of a good share that keeps on paying a good divvy. And we were looking at defensive shares and possibly embarking on some beta. One of the shares we did buy was Anglo's, and that's done very nicely for us in the short term. We weren't looking for major action. We were looking for between 10 and 15% as a target. We basically have achieved that, and we may see a little higher drifting into December. I do think that the market does have its risks. I think we continuously bombarded with bad news from particularly Europe. And now I see that the rating agencies are perhaps a little concerned that the US has not come to an agreement, well, between the Republicans and Democrats. So we may have a bit more bad news coming to the market over the next couple of weeks. But having said that, I do think it's towards the end of the year we might see the markets drift upwards. I don't think we should be looking for any fireworks. And we took away from the long end of the bond market. That's where we found the cash to go and purchase those equities, and we reduced our physical gold holding from 10% to around about 7.5%.
Yeah. Okay. So at this point in time, you're saying that the JSE is probably just going to drift along by the end of the year, in a sense. So you're going to keep your equity weighting at 50% at this stage.
Yes, and we think that's a relatively high weighting. I think in the South African context, we probably viewed as having a very low equity weighting, but we think that's appropriate for a general portfolio.
Okay, and you mentioned your gold weighting also down from 10% to 7.5%. You did say that you've taken away from the long end of the curve on the bond market to, of course, purchase elsewhere. With regards to inflation linkers, I know that they were your favourites. I know that you've actually also been, in a sense, downgrading your weighting there, if I'm not mistaken. Given the fact that we haven't actually seen a rate cut in South Africa, and we might only see one next year, now it seems that the game is changing so rapidly that everyone's just focusing on inflation. What is your strategy going forward there?
We didn't reduce anything there. I believe that one should have between 10 and 20% at all times in a portfolio with inflation linkers. They really, for me, the cornerstone of any portfolio, and we're quite happy with that weighting, so no reduction there. Yeah. We do think that with the rand having weakened, which was not what we had expected. We hadn't expected or anticipated such a rapid weakening of the rand over the last couple of months. But we are a bit concerned that we might see some imported inflation. And already we've seen signs of food inflation coming back again. Just anecdotal evidence suggests that now it's also a seasonal thing, that food prices seem to be escalating. We've seen the petrol price in rands arguably at its highest that we've seen. And I do think that's going to filter through. So inflation for me is not something that we should ignore. Maybe it's not going to be rampant, but I think we are technically going to be entering into a global phase of a stagflation, where you see inflation levels much higher than growth levels. And that for me is a little concerning going forward a couple of years.
Kimon, every 4 years or so, we know that Stats South Africa re-looks at the inflation basket. Any concern there with regards to the reweighting of the inflation basket going forward? Would that change your strategy at all? Does it affect the way you operate?
I think it does ultimately, but in the big picture, that basket's not really that significant, or the changes are not really that material for us to change any kind of weightings in our portfolio.
Yeah. Okay, Kimon, with regards to gold, and I know that you have been someone that's advocated having exposure to gold stocks themselves at 7.5% gold weighting. Is it in the new gold ETF? Do you hold Krugerrands, or is it a combination of all three investment strategies where you have a bit of all, including having exposure to those gold companies?
Primarily physical, so it would be Krugerrands and it would be the ETFs where you have a look through the ETF. That's assuming that the institution that stands behind those is quite sound, so I think one should actually do their homework before buying any ETFs, but I think that applies for anything. So, it's the institution behind there. So I prefer the physical, and Goldfields was one stock that we held for quite a while, and it's performed quite nicely. We actually sold it fairly recently.
With regards to your equity weighting, and you were saying that you're sitting at around 50%, some would say that that is relatively underweight. We know that pension funds in South Africa have an allowance of up to 75% with regards to equity exposure. Why is your equity exposure so low? Because you said in South African terms that it's actually quite a fair percentage.
Yeah, we viewed as having a low weighting. I think everyone's had this love affair with equities without really knowing why they're doing it. And one of the arguments that I really get angry about is when people talk about the long term. Long term means many things to many different types of investors. So, I mean, if you're 70 years old, your long term's a little bit different from somebody who's 30 and got a whole life ahead of them. So asset allocation for me is poorly executed in South Africa largely. And I'm not going to make too many friends by saying that. If you have a look, for example, all over the world, we've got Japan. Look what's happened to their index over the last 20 years, 20 odd years, in fact. At the end of 1989, beginning of 1990, their index hit 40,000, and we're currently below 9. So in real terms and nominal terms, you've done very poorly by being in equities, in Japan in particular. Over the last 20 years, we got some stats a couple of months ago, or as recently as 6 weeks ago, where in the US, bond markets outperformed equities. So for me, asset allocation needs to be taken a lot more seriously. And you know, you've actually seen some value investors doing particularly poorly because they don't take into account the beta of the markets, for example, financials.
Kimon, if I could interject there, you're talking about a lot of the developed markets that, yes, they haven't really performed. But here in South Africa, the JSE has done phenomenally well if you juxtapose it against some of the markets that you were alluding to.
No, not really. If you take it over different periods, the bond market's done equally well as the equity market. I think statistics can, you know, you've got to take stats with a pinch of salt. Yeah. And I think you should compare like with like. So if you, for example, looked at 1990 to 2000, 1985 to 1995, I like looking at 10-year periods. And unfortunately, we don't have much data with regards to the bond index going back far enough to do proper comparisons. But if one takes the benchmark stocks of the time, you'll see that bond markets did equally well. And the interesting thing is with a lot less volatility and a lot less risk. Okay,
so Kimon, give us your asset allocation numbers at this point in time. And given the scenario that is playing out right now, do you still favor bonds and that bonds should have a fair weighting, and then you cap your exposure, your equity exposure at around 50%?
I think 50% is the top end for us. Bonds I'm not particularly enthralled with at this stage of the game. But however, it doesn't mean that I'd have a low weighting to bonds. I just prefer to be at the short end of the yield curve. I want to stick with the 20% in inflation linkers. So if you take equities and inflation linkers, you're at 70. You know, and then you take the gold holding of between 5 and 10%, then you're close to 80%, and then probably close to 15 in bonds and the rest in cash. So I think one has to have a good spread of assets